Good afternoon, everybody. Welcome to our webinar this afternoon. Thank you all for taking time out of your day to join us here at SSQ Insurance. My name is Sheldon Frisch. I'm one of the senior inside wholesalers here at SSQ, and I'm sitting with my colleague, Safina Silverman. She is not only a senior inside wholesale, but she's also our business development coordinator. The two of us will be presenting to you today a concept tied to critical illness insurance in a presentation titled Planning Your Retirement with Critical Illness Insurance. I just want to remind everybody to please go on mute through whichever means you are dialing in through, and you can listen. All you've got to do is turn up the audio on your computer, and you'll be able to listen to the presentation through your computer audio. So we want to limit distractions. We want to limit outside noise. So if you're calling in, please go on mute. But otherwise, enjoy the presentation. And I will start right now. I want to go over the agenda of today's presentation. Number one, our SSQ Insurance corporate profile. We're going to get into product overview. And then we're going to get into the theme of critical illness as part of your retirement planning. SSQ Insurance, of course, corporate profile. We frequently say that we've been around. It's a 75-year-old company. You see, founded in 1944 by a progressive medical doctor. We are a collective success story, and we've met even today, 75 years later. We have remained solidly committed to the original core values. These core values of solidarity, accessibility, expertise, social commitment, integrity, and respect. Purpose is simple. This is our new slogan. We put communities at the heart of insurance because stronger communities make every person stronger. Very simply, we are very proud to serve the Canadian marketplace and to you and to your clients over the last 75 years. Why should you be looking at SSQ Insurance? Focus number one, our stability and our financial strength. We are rated A by AM Best, innovative and competitive investment and insurance products. We've got, of course, our full lines of business, but for our perspective, our investment and insurance commitment to be across country between our wholesaling presence, our office presence, and available to you and your needs at any time, our service, and our professional team. Of course, among many of the reasons to include SSQ and include us in your practice. Focus, of course, of our coast-to-coast presence. We've got distribution center, we've got sales teams all across the country. And just a short summary of the different business lines that we have here at SSQ. You recognize individual insurance and investment, but there's also the growth engine of SSQ, which is our group insurance platform. We've also got our large and growing general insurance platform out of Quebec, and of course, offices across the country, Vancouver, Calgary, Toronto, Montreal, Quebec City, and Halifax. We've got sales team and offices in all these centers to serve you and for your client base. And all this together, our coast-to-coast nationwide presence and how the relevance and how important our nationwide presence is to our strategy, our growth, our stakeholders, and to our ratings have contributed to us being the 6th largest insurer by premium volume here in Canada. The fact that we are the 6th largest gives us scale. It is how we get our preferred rates, and is how we have our preferred structuring and our preferred pricing with our reinsurers. And of course, being in multiple lines really supports the strategy and the ability to cross-sell to you, to your clients, and to among all our business lines across the country. Just to continue with some financial numbers and growth, we are a major Canadian financial institution. We've got over 3 million clients across the country, over 2,000 employees, over 12 billion in assets under management, both between our individual investment and our pension management. And we've got over $2.5 billion annually in consolidated insurance premium. And that leads, of course, to us being recognized for our size across Canada, 6th largest insurer. Just to go over a little bit more, as I said, we recently announced our AM Best rating has been upgraded to A with excellent outlook, so that we're very excited about. Thank you very much for your efforts to making this happen. Our solvency ratio is at 206%. Our return on investment is sitting at about 10.8%, and that helps us being ranked overall. Our overall company ranking has been 4th in insurance companies across Canada through the Environics research study. And really, thank you very much to all our advisors, all our clients, in helping SSQ achieve these strong financial numbers, strong returns, strong solvency, amazing rating, and our recognition as to our standing by Environics. We also just wanted to continue on the last of our financial slides, sustained growth. We have been committed to growing our insurance premiums and our net income. You see the tables, how we have grown between 2014 to 2018. Our insurance premium have grown over 4.5%, from 2.1 billion to 2.5 billion. We've got growth year over year. Our net income has grown over 15% year over year. Starting in 2014, we were at 54 million was our net income. And of course, right now, 2018, we had net income returns of over 95 million, 15% per year, year over year. Consistent, strong growth. Our company has sustained growth in all business units, both in premiums and net income. This puts us in a very, very strong position to keep our solutions innovative and affordable. Personality. SSQ really believes in the slogan, believes our personality is supported or is based on these 3 concepts: supportive, modernity, and positivity. SSQ, supported. We are community-minded. Put community at the heart of insurance because we know that stronger communities make every person stronger. Strength of a group at the service of each individual. Community well-being is what resonates in the choices we make and the actions we take. We are a mutuals company. We're not a publicly traded company. We believe in sustainable development issues, charitable causes, investment choices, etc. They're modern. We were founded by a progressive medical doctor wanting to offer medical services in Quebec City to those who couldn't afford it during the wartime. From the beginning, we have been driven by change. Being modern means rethinking our role in society, such as our focus on health and prevention. We embrace new ideas that move us forward and help us innovate. Listen to our delegates, our partners, and our customers to better access their needs. We're positive in our actions. We want our customers to enjoy life, knowing that they're covered should the unexpected happen. We want to leave a positive impression even when things are tough, through genuine interaction with our customers and our partners. As recently announced, we are proud of where SSQ is heading, and in our recent merger between SSQ Insurance and La Capitale Financial, we are excited of the joining of equals between both companies, and are really excited for the opportunity of growth that the merger between both companies are going to offer outside of Quebec and across Canada. So this is going to be a huge opportunity for us to be able to continue with our fabulous pricing, our rates to you, continue with our fabulous product line, group insurance from one side, home and auto from another side, insurance from us, insurance investment from us, insurance and investment from La Capitale. Very exciting times going forward for SSQ and La Capitale. A lot of questions. We've been getting a lot of questions for our advisors. One specific one, and from the industry, the marketplace, our MGAs, everyone is asking, how are you going to amalgamate it? What will this company be called? At this stage, considering we only announced it about 5-6 weeks ago, it's too soon to say. Keep in mind, we want to make this as an inclusive project with the involvement of all our employees between both companies. Considering this merger is a result of a common will and is carried out on an equal footing, we're jointly creating a new entity that will be the largest mutual insurer in Canada. Various steps still need to be taken to ensure that the merger is effective. Our advisors, policyholders, investors, and unit holders will all be informed in due course. Getting a lot of inquiries, of course, will our clients be informed of the next steps? We are aware that we don't have the answers to all your questions at this point, but rest assured we'll get them as soon as possible. We wish for a smooth transition. We'll keep you informed along the way before the changes take place. To discover the vision of Jean Saint-Gelais and Jean-François Chalifaux, the CEOs of the two companies, Jean-François Chalifaux is SSQ CEO, who will be the CEO of the new merged company, while Monsieur Saint-Gelais, the CEO of Le Cap, will be the chairman of the board of the merged company. We invite you to watch the following videos, an English video on the merger of the two companies and the two visions. Now let's get into some product overview on what us here at SSQ have to offer. SSQ Insurance, of course, we offer a wide range of product solutions for your clients. Group insurance, which has always been the growth engine of SSQ, individual insurance, individual investment, pension investment also, investment retirement, and general insurance. Of course, for your needs, your perspective, your partnership, we work with you and your clients through the individual insurance and the investment side. On the individual life insurance and investment, our offering spread across, especially the life insurance, we're spread across the whole spectrum of offerings. Term Plus, of course, is our flagship term platform. Universal life, whole life, critical illness, and on the investment side, we've got our segregated funds, and along with our GIAs, which are guaranteed investment accounts, and our high yield savings account. Term Plus, of course, our flagship loan insurance solution offering. Term Plus is a base life insurance offering, which is the term itself, with additional riders to be added. Our child rider, critical illness rider, disability rider, etc. It also comes with the built-in features as access to credit, something to keep in mind when it comes to life insurance. Our 25% insurability benefit, which is the opportunity to increase your coverage by 25% without evidence of insurability. We also, of course, have our extreme disability benefit up to age 60. Clients are in a point of disability where they are unable to perform 4 of the 6 functions of daily living. We will give them an advance from their life insurance, their policy, to basically manage their lifestyle going forward. The quintessential feature of the Term Plus life insurance is that both life insurance and disability insurance coverages are independent of any loan, now and forever. Of course, Term Plus also has renewals. Once the initial term expires, anywhere from 10 to 40, we renew over on 5-year increments. And of course, that renewal goes to age 85. Universal Life. Our Universal Life, simple, accessible, flexible. Simple. We've developed our product so you can easily explain it to your clients. It's accessible. We've made it relevant for both family markets and corporate clients. And flexible. We have enough options to personalize and customize the coverage protection. Personal and corporate opportunities. Your client is looking for a permanent insurance solution, whether transferring wealth to the next generation, insurance for their children, managing taxes at death, growing their estate. Corporate insurance needs have the expertise, or growing their estate or corporate insurance needs, we have the expertise to help you. We've got both personal and corporate opportunity. For personal, for clients looking to have guaranteed permanent protection, the known benefit, and for corporate, guaranteed protection compared to alternatives, flexibility with premiums, i.e. paid-up features, cash surrender values. CSV is not a priority. We're offering flexibility for transferring if structure or stakeholders change, i.e. buy-sell agreements, keep person agreements, etc., etc. SSQ Investment Funds. We offer independent, fund managers. SSQ itself is not. We're not an investment management firm. We partner with some of the best managers out there in the industry to bring investment solutions to you and to your clients. Turnkey portfolio options. We've got our smart beta, low cost, low volatility, sort of index type portfolio program. We've got our strategy portfolios, which is mainly Canada, US, more domestic based. We got Celestia portfolios, which is our international, more growth-oriented portfolios. We got our private wealth management, which is our high net worth investment offering, starting at 500,000 family assets. It's not just each individual has to have 500,000. It's pooled. It's the two partners in the home, the two spouses, even family members. If you could pool together 500,000 within different houses, in different family units, you still have access to our discounted MER, discounted pricing structure. Our 100 optimal guarantee, segregated fund contract and estate plan up to age 85. You can open 100 contracts for clients. Contract will last. It's a 15-year contract. If you open it right before 85, you'll have it till age 100. Designate beneficiary, pass on to upon death, path to beneficiaries, and bypass any costs, as this is not part of your estate. High yield investment account. High yield investment account is a great place to park money while you wait to deploy, especially in the current market environment. If that's a concern, we can get into that. And competitive compensation structures. There's our just our front end only, our no load compensation, of course, our mode B, many of you recognize and use as a compensation piece that we can also follow up and provide that information to you. Merit plan. Our merit plan is our merit program back for 2020. It is our top producer recognition platform. This is our bonus program to you directly from SSQ. They're calculating credits. You accumulate 1 million sales credits, and we will pay you out a check next February for that accumulation. You can qualify with only insurance, only investment, or a combination of insurance investment sales. Basically, you can combine life insurance and investment purchases, minimum 5 issued insurance policies, no minimum if it's only investment. The target is 1 million sales credits. Of course, we will pay out the cash bonus before RSP deadline. Within investment segregated funds, it's dollar for dollar. $1 in segregated funds is 1 credit, so $1 million of segregated funds is 1 million credits. In life insurance, a little different. Net FYC, $1 in net FYC will be equivalent to 40 credits. So it's a multiple of 40, 25,000 net FYC multiplied by 40 will get you to your 1 million, will get you to 1 million sales credits, and it can be a combination of life and investment. And here is sort of the bonus plan, the graph for the merit plan. At 999,000, of course, you still won't get. From 1 million to 2 million, we'll pay you out 16 basis points. Start at 1,600. From 1 million to 3 million, we'll start 1,600. It generally will get to about 3,200 by then. 3 million to 4 million, we'll pay 24 basis points. 4 million to 5 million, we'll pay 32 basis points. 5 million over, 40 basis points. So you see how the check payable to you grows exponentially. As you accumulate more credits, the bonus, the bonus percentage increases, of course. Target is prorated if you've joined this year in 2020. Section 3, critical illness as a retirement tool. Now we're going to get into the concept. We've got into our products. We got into who is SSQ, but now we want to get into the theme, the critical illness as a retirement planning tool. Objective of the presentation is to demonstrate that critical illness insurance should be included in retirement planning process for the following reasons. The current environment, the current context, different concerns of retirees, critical illness statistics, flexibility of critical illness insurance coverage. The current context, as we know, capital markets can be, and today and are, and the last couple of weeks they have been volatile. Interest rates remain at historical lows. Life expectancy has increased considerably. Market conditions. We have seen the last 20 years some significant market changes dramatically have affected client savings, retirement planning, and portfolios. I'm going to go over a couple of examples. In the year 2000, for example, International Monetary Fund expressed concern about instability in the months leading up to the sharp downturn. Technology-heavy NASDAQ stock market peaked yesterday, March 10, 2000, so 20 years ago yesterday, the NASDAQ peaked. And then came the technology bubble, followed by 9/11 attacks, caused global stock markets to continue to drop sharply. September 2008, failures of the large financial institutions in the United States due to exposure to securities of unpackaged subprime loans, credit default swaps rapidly devolved into a global crisis, which resulted in numerous bank failures in Europe, sharp reductions in values of equities and commodities worldwide. And right now, today, this year, 2020, COVID-19 outbreak, coronavirus, is causing global supply disruptions. As a result, stock markets continue to experience drastic losses, and its volatility is strongly impacting economies globally. So these current market conditions, we've gone over the last 20 years, what has gone on. What about what's going on today? Interest rates remain at historical lows. Interest rates have declined gradually since the 1980s, continues its downward trend. We're currently at the lowest rate in history. The Bank of Canada reducing the rate by 0.5% on March 4th, 2020. Life expectancy. Now, we all acknowledge life expectancy has increased considerably. So the question is, how does living longer affect your ability to maintain your financial well-being? In Canada, since the 1960s, average life expectancy has greatly increased. 1973, average life expectancy was 73.16 years. By 2016, average life expectancy had increased to 82.3 years. For the year 2019, life expectancy in Canada for males was 80 years and female was 80 years old. Oh, 84. Sorry, my mistake. Oh yeah, oops. For males was 80 and females 84. What retirees may fear. Your clients nearing or in retirement are most concerned about their savings portfolios being adequate to last. Since it is expected they will live longer. I've heard the phrase, the longer you live, the longer you're going to live, which makes sense if you think about healthy clients in their 70s, 80s, or 90s. If their good health continues, will their savings last to maintain the lifestyle they are accustomed to? Unexpected expenses. Clients are also concerned about unforeseen expenses that can jeopardize their retirement plans. For example, unexpected health risks, outliving their savings, unwarranted expenses, medications not covered by a group or government plan, lifestyle, home modifications, physical limitations that requires the need for assistive devices, such as hospital beds, crutches, canes, home care, care in a public or private facility. What about a critical illness event? And as we know, what about a critical illness event? It may require medications and or treatments that are experimental in nature, not affordable, and not available in Canada. What are your options? Reality is, all these factors could obviously cause a drop in retirees and your client's income. What about returns to recover losses? What if you were to have a significant loss in your portfolio, near or in retirement? And what is the return? How much do you need to recoup? How much do you need to return to grow to recover these losses? Damage a loss can cause, and the returns needed to recover from a loss disheartening, the fact that the market tends to drop quickly and move up slowly. When doing the math, losses tend to get larger, and the return necessary to recover increases at a much faster and higher rate. For example, loss of 10% needs 11% gain to recover. Increase that loss to 25%, and it takes a 33% gain to get back to the break-even point. Look at the last example on the table. What about if there's a 90% loss in the portfolio? It'll take a 900% return to get back to that break-even point. The boomer generation are entering retirement are looking for guarantees. Clients are looking for guarantees offered by insurance carriers, and these are often the go-to products. Guaranteed solutions such as the guaranteed investment certificates, segregated funds, life insurance, or critical illness products. Some statistics. Every year in Canada, we know there are about 100,000 cases of cancer, 45% of them male, 43% female. We have 67,000 heart attacks, 6.1 per thousand, 50,000 strokes, 14,000 coronary bypass operations, and at 6.8% of Canadians over 65 and 30% of Canadians over age 85 will move to a long-term care facility. We got this from Statistics Canada. So just want to read a couple more stats for your relevance. 4 out of 5 Canadians, or over 63% of the affected Canadians, will survive cancers for 5 years or more after cancer diagnosis. More than 90% of people who suffer a heart attack in Canada will survive, and men are 2 times more likely to suffer a heart attack. 80% of individuals who have a stroke, 10% will have a complete recovery. About 6% will result in death due to the stroke, 20% of cardiovascular-related deaths, and the remaining will have varying degrees of long-term disability. Some risks to consider. Aging. The number of seniors is expected to double. Number of seniors here in Canada is expected to double by 2031. So what are the risks to consider for cardiovascular disease, for example? Healthcare costs. What are not covered by government health plans? I'm now going to pass the presentation on to my colleague Safina, who will get into the details of the critical illness and retirement plan.
Thank you, Sheldon. So I'm going to start with how you can protect yourself in the event of an unforeseen medical event. So let's talk about the benefits that you can get from a critical illness. So the critical illness benefit is paid out to you tax-free right now. That is by the government regulation. It is tax-free for now. It is not a definitive answer. The government has the ability to change that decision anytime down the road. And of course, we also have the premium refund if the client doesn't have a claim. So that is a rider on this product. So tax-free benefit to avoid making an RSP withdrawal will be one benefit. The potential uses are the benefit for income replacement, medication expenses such as parking, travel costs that you may incur while you are ill. And the ROPs that we have are available after age 55 if you have an RSP plan that pays out. Some highlights about our critical illness coverage. Our available plans, we have 2 plans available. Our basic that covers 3 conditions, heart attack, stroke, cancer. The enhanced covers 25 conditions. And we have children's critical illness, which can be a standalone plan, covers 28 illnesses. Types of contract, we have individual or multi-life, so you can have several individuals under the one plan. Enrollment ages, so we have our T10, T75, T100, age 18 to 65. T20 is 18 to 55. So the T10 and 20 will end at age 75. T100, we have paid up for 20 years or to age 100, issue age is 18 to 50. T75, T100, and T100 paid up for 20 years for children, of course. And 30, so children are from ages 30 days to 17 years old for the issue. We have our different rate bands. So as you can see, the prices, so the Higher the coverage, for example, 250,000 to 2 million, there'll be a different cost per thousand. So the lower the coverage, the more per thousand is the cost. We also have the supplementary benefits or early intervention type benefits. There are 4 conditions that are covered under that for the early stages of breast cancer, stage 1A prostate cancer, I believe coronary artery bypass, and angioplasty. There's also assistant benefit that is built into our coverage. For every CI coverage that you have, the assistance benefits are included. So it's a second opinion medical services, referral services as well that you have in the plan. So the highlights of our critical illness, we have a return of premium on death, which is a 100% available on our plans. Return of premium expiry, so it's 100% of the premium. It is available on our T10, T20, T75, but the plan has to be in force until age 75 for these coverages. For the T75, we also have return of premium and expiry or return of premium and early surrender. Early surrender is age 55. And we have for the T100 and T75 also cancellation on expiry, so either at age 75 for the T75 or age 100 for the T100. So the way we position is it's for the T75 and T100, the early is the later of 20 years or age 55 for the cancellation. And of course, expiry will be when the plan expires. Additional coverage for children for critical illness. So we have the CI rider that covers 15 conditions for children. We can have the waiver of premiums. They are on the payer for the policy. And there's also the benefit in case of fracture that can be added as well for this. Critical illness highlight continues. So this is just an example of a 35-year-old male. If you were to purchase the coverage, the basic coverage will be annually for 100,000, $1,397. The enhanced will be $1,703. The basic coverage with the return of premium on death and return of premium cancellation will be $1,718, and the return of premium on death and cancellation for the enhanced coverage is $2,095. You can see it is not that expensive, but I guess clients have different opinions when it comes to cost. Again, continue. We're looking at a female. These are the costs for 100,000. Basic is 1,301, enhanced 1,621, with ROP on death and on cancellation 1,600, enhanced return premium on death and on cancellation 1,983. Continue with this has to do with commissions. So on the 10, we will pay 45% on the FYC. T75, T100, and T100 pay for 20 years. We pay 50% on the FYC. Year 2 to 5, we will pay 5%. Year 6 and onwards, we will pay 2%. On renewal, we will pay for 15% for these coverages. For critical illness continued, for the child rider, we will pay 40% for the FYC. The ROP options, 30%, year 2 to 5, 5%, and year 6 and onwards, 2%. So as long as the policy stays in force, you will get those residual commissions that are paid out. So let's get more into the detail about a critical illness. So what would you do to protect your client's retirement and lifestyle? So we'll try to show you that critical illness is part of that overall retirement planning tool for your client. So your client will have a need for a stop-loss strategy to protect their hard-earned lifestyle and retirement. Show them how critical illness can be a part of their full financial plan to protect them from the unforeseen events that can happen. The frequent objections that you have with critical illness will be, it is too expensive, the underwriting is too difficult, or they don't pay at time of claims. So your client has a need for critical illness. So critical illness basically is a living benefit. So with living benefits in general, like disability, it is more costly. With critical illness, the client has to survive 30 days in most cases, and then the proceeds, as long as a claim is made, it's a valid claim, the death benefit will be paid. Underwriting is based on the proposed life insurance overall lifestyle and health, and also strong on the family history side. So that plays a big part in the underwriting. We at SSQ have a family history guide that you can refer to. We also have an adult bill chart the critical illness preliminary questionnaire for adults and for children. And that is to help you pre-screen your clients before making the application. So this way you're not wasting your time. You can also send the preliminary opinion inquiry to us to see, is the client insurable if it is not within the guidelines that you have access to. Critical illness is more costly than life insurance, like I mentioned, because it is a living benefit. And of course, it pays if you survived a critical illness condition. So it has to be a covered condition under our contract. At the time of claim, the information is needed to confirm if the condition meets the definition as per the contract that is issued to the client. We will require the doctor's information, pathology report, all of that to confirm the information to meet the definition. And if the client survives the 30 days, some conditions, of course, may be longer waiting period, then the benefit is paid out. The majority of the claims submitted are paid to SSQ, but some are denied because the condition is not a covered condition in the contract, or the information provided did not meet the definition of the contract. Some claims are withdrawn by the client because, again, it does not meet the criteria for the claim. The critical illness contract is a unilateral contract, so it is up to the client to meet the definition of the covered condition as per the contract. So if the claim does not meet the definition, then it is not paid, in simple terms. As well, when a claim is made, the policy has to be enforced if a claim is made, so that if it's approved, the claim can be paid. If the contract was canceled, then a claim cannot be paid. It's as simple as that. So funding CI with your tax refund. So this is just a sales idea for your client. So if you look at CI as a stop-loss strategy to mitigate risk and prevent depleting of the client's retirement savings, then since CI is perceived as being expensive, why not look at using your income tax refund to fund a critical illness policy? So the annual tax refund can be used to fund a CI policy annually without having to take monies from your regular monthly household spending. So in most cases, clients may not receive $5,000 or $10,000, but they may receive, say, $1,000, $2,000 annually. So that is the monies that can be used to purchase an adequate CI policy that can prevent them from depleting their savings or retirement. So protecting your RSP with critical illness insurance. So here's an example. So the scenario here is if we look at critical illness, an RSP, we have $150,000 withdrawn from an RSP. Right away, the client will be in a higher tax bracket. There'll be a net loss, assuming that there's a 45% tax bracket. The loss is spelled incorrectly. I am sorry. You lose the advantage of compounding growth. So it is an unfortunate event, basically. So in an unfortunate event that you were to have a critical illness event that requires long-term treatment and recovery, and don't have a benefit plan such as medical or disability coverage, you might be tempted to dip into your RSP savings to access funds to cover these basic household expenses. So withdrawing from your RSP could potentially cost you hundreds of thousands of dollars in the long term. This is also true if you are a self-employed individual or business owner and needs to keep your business operating. So this is an example of what is happening here. If you were to have an RSP and you assume an annual rate of return of 6%, you make annual contribution, you'll have the advantage of the compounding and a growth over a 20-year period for $150,000, you will be looking at about $481,000, just rounding off the number. So you can see the benefit of that. So again, protecting your RSP with critical illness and without critical illness. So each individual, same age, both have the same expense. So they both got diagnosed with a critical illness coverage. The first client buys a CI for $100,000 at T75. The second individual did not. Both individuals has a CI event at age 50. Client one got paid out $100,000. Client two delved into their RSP savings for $100,000. So to show the scenario here, client one has $25,000 left over from their CI claim from the $100,000 that they got paid. So total expenses for both are $75,000 for the full, CI recovery. The client one took the extra $25,000 and invested it in a non-registered investment. Client one also continued to contribute to their RSP, $5,000 each year. So these additional deposit to age 65 grew to $425,000. That $25,000 they took and invested in a non-registered investment grew to be about, what did I say? Oh, yeah, $25,000 in non-registered investment. Yeah, client two, of course, Delph had to deal with a significant loss. He had no monies left from the RSP because $100,000 taken out from his RSP, of course, put him in a higher tax bracket. There's a withholding amount, so he got less than $100,000. He spent $75,000 on his expenses, so he had no money left. He also continued to fund his RSP through the year to age 65. So he had no monies left to reinvest outside of the RSP. So with the scenario, I'm going to go through this. So both clients assume that at age 65 for their retirement plan, the first person invested $25,000 left over. The second person had none. The first person also continued to fund their RSP by $5,000 each year. So there's the second person. The client two savings accumulated to age 65 was $136,000. Client one, $425,000. Plus the $25,000 of investment. So as you can see, the client two had a significant loss, because of the withdrawal from the RSP and really cannot recover from that loss. And he had no monies left to reinvest. The next topic we'll get to is our electronic application. So just get back to the critical illness. As you can see that with a critical illness coverage, it can really be part of that retirement planning tool strategy to protect the client's entire estate. So it's not just about a critical illness event. It could be any other event that can happen with the client that they may need to have monies available. Say something happened to one of their children. They may need to come up with a large sum of cash right away. So it may not be a CI, it may be cash values from a life insurance policy that they plan as part of their retirement strategy. Their non-registered savings they may have to deplete to help someone. So those are the things that can also affect their retirement savings. But critical illness is a very good one because we know the stats show that there's a large number of Canadians who will suffer a critical illness event in their lifetime. So with our critical illness insurance, our Term Plus plan, we have our electronic application. Electronic applications, the client can be face-to-face or non-face-to-face for our critical illness insurance. For our term and critical illness. Applications are available through this site. I believe when you get your confirmation, your username and password, your username will be your email address and you will be assigned a password. And you have to be contracted with SSQ before you're able to have access to the electronic application. So in the electronic application site, we have a pre-recorded webinar available. It's about halfway down the page, as well as 10-minute video showing you how to complete the electronic application. If you haven't received your username and password for this site and you are contracted with us, please send an email to clientservices@ssqinsurance.ca with your name, email address, and advisor code. And you will get set up and an email will be sent to you with the link, username, password, and any other information that you will need. For now, we do not have Universal Life or our whole life product available using the electronic application process, but we are working on that. With the electronic application, if you're having difficulty, we do have a customer service that you can call. We'll provide that number when I send out the I'll send out the presentation to you, a PDF copy of the presentation at the end with some contact information that will help you through that, so you are able to. Now, there are limitations on the face amount that you are allowed to apply for through the electronic application. Critical illness, I believe, is $250,000. For life insurance, it is up to $500,000. Sorry, $5 million. Sorry, I don't know my zeros. Sorry. $5 million for life insurance using the electronic application. If you're seeing a client face-to-face or non-face-to-face and you run into difficulty, have our paper application readily available so that you can complete. Now, with the electronic application process as well, when you complete the application, you do not have to order any of the underwriting requirements, blood, urine, paramedicals. SSQ will automatically order those for you, so you don't have to do any of that. You do not have to ask me any of the medical questions either. What you do need to do is do your field underwriting to make sure that your client may qualify for the insurance. If you have any questions of the client's insurability, send us an email and we will provide you with a preliminary opinion whether the client may or may not be able to get coverage with us. Okay. As well, want to introduce our dedicated insurance team. So the 4 people on top, those are the VPs, and Stefan Chrétien, who is the 4th person, he is the manager of the inside sales team. So just to go through the sales team across Canada, for British Columbia, we have Jeffrey Moe, who is the Director of Business Development. Stephen Paul is the inside sales, so the business development inside sales who works with Jeffrey Moe. We also have Stephen covering for all of BC. So he will cover all of BC, whereas Jeffrey Moe cover part of it. But right now, Stephen will, if you, Jeffrey is not your wholesaler, then contact Stephen Paul, who will provide the information you need. For the prairies, we have Paul Grunsel and Adeline Thompson, who are the Senior Director for Business Development. Dino Delides is the inside sales that supports all of the prairies for both Paul and Adeline. Ontario West, we have Lynn Giles, Senior Director, and working with Lynn Giles is Sally St. Leger, the inside sales. Sam Alves, he's the Director for part of Ontario West as well, and Sheldon Frisch is the inside sales. So just to clarify the Ontario West team, Lynn and Sally covers everything west of Burlington. Sam and Sheldon covers, of course, Toronto, west to Burlington, and north to Brampton, Milton, and Orangeville, and anywhere north of there. That's the territory that they cover. The Greater Toronto Area, Sean Redford covers the Greater Toronto Area as a wholesaler, and Gordon Chan is the inside sales person that works with Sean Redford. Ontario East and North, Barry Rubin is the wholesaler, and Barry covers Ontario East and North from the, I would say, Highway 7 north to east, as well as up to Belleville and anything north of that. North. So north of the Highway 7, all the way north, east, and to Belleville, and of course, anything north of Belleville as well is covered by Ontario East. And this will include Markham, Newmarket, Aurora, all those areas that is part of Ontario East. And then finally, we have our Ottawa, Kingston, and Atlantic region. Sharon Hillier is the wholesaler, and Josiane Grenier is the inside sales contact for the team. Now, if you have any questions, you can type it into the chat line, and we will answer some of them for you. We have a little bit of time. Okay, thank you very much for participating. So we'll try to answer some of the questions that comes up on the chat line. So we're just trying to access the information right now.